Today I want us to discuss about divergency, and this is when we look at price versus a momentum indicator. So when we talk about divergency, this is when the price is doing the opposite of the momentum indicator. Like for instance, in this scenario, we are going to use RSI divergency. So I'm going to show you how to use an RSI divergency to be able to identify a divergency in the market. So we have two types of divergency: bullish divergency. This is when the price makes lower lows, but the momentum indicator makes higher highs. And we have a bearish divergency, and this is when the price makes lower lows and the momentum indicator makes higher highs. So in the charts, I'm going to show you how to use it in TradingView. So you will come to your TradingView, and then now to the indicator session. Then you type in the type of indicator, that is the RSI divergences, so you can see it there. So you have it in your chart. So this indicator basically shows you instances when we have a divergence. So like in this scenario, we have a bearish divergence. So what do we mean? So if you pull the price down, you'll see at this particular point when the momentum indicator, the RSI divergence, is creating lower lows and lower highs, but you see the price is creating higher highs and higher lows. So you can see the price is doing the opposite of the indicator, so it's creating higher highs and higher lows. So that's where we have a bearish, that's where we have a divergency. So for a bullish divergency, so we can be able to see it here when the price is creating lower lows. In the relative strength index divergency is creating higher highs, but the market is creating lower lows. Okay, so here we have a divergency, and the purposes of this divergency is they will show you instances when the market is weakening or the momentum is weakening and we anticipate a reversal. For instance, if you look at the bearish divergence, when we had this bearish divergence, you can see this divergence when the RSI divergence is creating lower lows and lower highs. We see the price creating higher highs and higher lows, but within a short period of time, we see now the trend reverse, and now we enter into a bearish scenario. Okay, so if you are looking at maybe probably bullish sentiment, right? So this is a bullish sentiment. So you can see already the price had created a change of character, right? The price had created a change of character there. So meaning that now we are entering a bearish scenario, but now we see the price, this divergency, and within that time, once we have this divergence, you can see the price is creating lower lows and lower highs, but this one is creating the price is creating the price is creating lower lows and lower highs. So we have a divergence here, and then you see the price now tends to reverse. So anytime you see a divergence in the market, basically know that the momentum is weakening and we anticipate a reversal. For more insights, make sure to join in our live market analysis, which happens from Monday to Thursday, 10 a.m. to 11 a.m. GMT +3.